This is the Times Television Network, and you're watching ET Now.
Hello and welcome to the year of the deal. 2010, an important year because it allowed for the recession to turn into recovery, the trot into gallop, allowing for a new breed of global Indians to come on the scene, where every Indian and Indian entrepreneur wanted to be ahead in the M&A race. Catch up with the biggest deals of the year 2010.
Finally signed our legally binding definitive agreement with Zain Group to acquire their African assets, 15 countries in particular. So Bharti Airtel has been looking at getting into Africa, and this has been an opportunity that we have been waiting for.
This was the trophy deal of 2010. Bharti buying out Zain made Bharti Airtel the fifth largest telecom company in the world. In the largest ever telecom takeover by an Indian firm, Bharti Airtel completed a deal to buy Kuwait-based Zain Telecom's African business for $10.7 billion or nearly 50,000 crore rupees. The transaction was the largest ever cross-border deal in an emerging market and resulted in a combined revenue of $13 billion. Bharti bagged itself Zain Telecom's operations in 15 nations in Africa.
Very delighted. This is a landmark deal. It's a transformational deal. It's, to my mind, a game-changing deal between India and Africa, and this will enhance the cooperation between India and Africa.
For Bharti, securing mobile operations in fast-growing Africa is key to growth strategy as growth slows down in its home market, India. It has failed twice in its attempts to merge with South African behemoth MTN over the last 2 years.
Cultures are different. However, languages are different. There's a lot of French, a lot of Portuguese, etc., etc. However, regulations are different in each country. So one has to adjust and acclimatize to each one of them. But I think we are going with an open mind. We learn those new things. So I'll not call them differences, I'll call them new learning areas.
It was India's second biggest deal in pharmaceutical space and one that put makers of generic drug firms firmly in the spotlight. US-based Abbott agreed to buy the generics drug business of Piramal Healthcare for $3.7 billion, which is a whopping 17,000 crore rupees. In one shot, this made Abbott India's biggest drug maker.
So our commitment to remain in the pharmaceutical industry is there, and we look to these future areas to continue to invest and grow. There's a huge potential in the domestic market. I think India's growth is only just beginning. I mean, our growth, our own domestic business has been growing 25% plus. So I cannot say that the domestic business, I think it's a great business to still be in.
The deal transfers 5,250 employees to Abbott, giving them a ready-made presence in India. However, Piramal Healthcare retains its custom manufacturing, over-the-counter drugs, critical care, vitamins and some of the other businesses. This deal happened within 15 months of Ranbaxy selling its generic business to Daiichi Sankyo of Japan. With some of these, India Inc.'s M&A deal value touched nearly $50 billion during the start of 2010, between Jan and July. And that's over 3 times the total of 2009, when the same period saw $16 billion worth of deals. Banking consolidation in India has always thrown up surprises, whether it was HDFC Centurion Bank a few years ago or the recent Enam Axis deal. A promoter-driven standalone investment bank, Enam had built a strong foundation in the IPOs and fundraising businesses. With scale becoming a necessity, Enam was forced to think out of the box, consider a plan to access new sources of money and deposits. A merger with a retail bank sounded like a perfect idea. Meanwhile, Axis was looking to build inroads into new segments, and investment banking wasn't a big piece so far for them. Within a year of Shikhar Sharma assuming charge, Axis's new ambitions were now rolling out. A quick and a quiet deal with Enam gave Axis high speed in a segment that it was so far missing in, which is the investment banking arm.
The present business in equities and banking that Axis has is a very small, and I think it will easily merge with the business and the people and the processes of NM.
Adding this investment banking piece to our corporate banking franchise, we strengthen our proposition both to Indian clients doing Indian business and to Indian clients who are going overseas.
For the company and for me personally, this is one of the most important announcements that I have made in the last over 25 years.
The Hero Group finally split with Honda, where Hero decided to get all the technology transfer from Honda, both for current and future models. Hero simultaneously is also developing its own research and development, and this split is going to allow it to look at global markets and new geographies. Hero Honda have had hiccups over the past few years, especially in the last 5, where decision-making on certain issues has certainly been an issue. While the split has been seen coming, there have been some concerns around how a partnership that created the world's #1 two-wheeler company will keep up the momentum after the breakup. Mukesh Ambani's Reliance may not have done landmark deals this year, 2010. But it certainly announced finding the new energy jackpot in shale gas. Much of this meant scouting for assets in the United States of America. Smaller deals, a few of $1 billion plus, in the US took Reliance to the shale bazaar. In energy otherwise, a good number of outbound deals during the year were done to secure raw material supply. Prominent examples include the $4.8 billion deal that involved ONGC, IOC and Oil India to jointly develop a crude oil block in Venezuela. Adani Enterprises bought out Link Energy's coal tenements in the Galilee Basin. And then you had a $600 million buyout where SR Group looked to pick up Trinity Coal Corporation in America. As the calendar year draws to a close, here's a look at what drove the M&A moves of corporate India in 2010. For one, foreign assets have turned more attractive, taking India outside. Outbound M&A indeed was worth $25 billion in deal value, bulk of the action seen back home. This is a whopping 23 times the deal value reported last year, that's in 2009, when problems faced by some of the large buys of 2006 and 2007 were still being digested by firms, the Birlas, the Tatas and many other corporate groups. Funding constraints have also come out, as a result unleashing India Inc.'s global dreams. Quite a contrast to the past when buying brands, expanding geographies and acquiring operational control were the only key motives. This time, it's the hunt for resources. There have been many deals during the course of the year that have remained work in progress. Some fell out thanks to big egos, and those that continue to remain marred in controversy. He is the famous takeover tycoon, but this is one takeover that is taking Vedanta Group into twists and turns. In the last 3 months or so, Vedanta and Anil Agarwal have become centers of many storms. On 16th August this year, Kane and Vedanta announced a big deal. In an unconnected development just 9 days later, in an environment milestone in Indian corporate history, Jairam Ramesh's Green Ministry cancelled Vedanta's bauxite mining license in Niyamgiri in Orissa. Rahul Gandhi also rallied in the region in support of tribals.
विकास का मतलब हर एक व्यक्ति, हिंदुस्तान का हर एक व्यक्ति एक साथ आगे बढ़े। आपकी जो यहाँ आवाज पुछली जा रही है, दबाई जा रही है, उस आवाज के लिए मैं दिल्ली में आपका सिपाही हूं।
This political hot potato turned the tide for Anil Agarwal, whose firm was accused of violating forest laws, tribal issues and environment norms. The Kane-Vedanta deal, though unconnected, too got mired into controversy. As state-owned ONGC stepped in, saying Anil Agarwal cannot buy out Kane's India assets when ONGC has a share in Kane's largest oil block in India. Kane continued to suggest this was a deal which would only see change in ownership and corporate transfer and not a shift of asset. But ONGC has been firm that it deserves a big share of what is a nearly $10 billion deal.
we have a total commitment with the Cane India that we are going to get the profit to reinvest it in a Cane India. Oil and gas is a very important in a natural resource. No, if you look at a company like Vedanta, I believe that there should be at least 20 companies like Vedanta in India. So we will keep deploying the resources back to our companies.
I think there's a lot of potential in Rajasthan, and I think he sees that as well. So for us, he's keen to give more support to the management, reinvest in the business, and we're interested in retaining a stake because we still believe in Ken India. So I think it's the vision that attracts me to Vedanta doing this transaction. Obviously, they've offered us a good price.
Despite several rounds at the power centers in Delhi, Bill Gamble still has a real match ahead. Gamble is known to have a thing for rugby, which also is the logo of Cane Energy, the oil and gas company he founded and runs. What's up ahead? A real rugby match where the government and ONGC will force Cane to tackle a long, uncertain game. It's time for us to take a short break. Plenty deals done and many undone. Back in a moment, but we'll take you to the Dome where two investment bankers, Frank Hancock and Saurabh Agarwal, join me to look deep into 2011.
Show brought to you by the Shiva Studio. Art is life is art. Taking India to the world.
Birla Group, taking India to the world.
Welcome back to the special show. We're now going to get you a sense of how things have been from the eye of the banker. How have the deal books actually looked, and will 2011 promise just as good or perhaps a better one ahead? With me, Saurabh Agarwal and Frank Hancock. Gentlemen, thanks for joining us. How do things look to you, Saurabh, if I to start with you in 2011? Are we going to be a positive M&A story, capital raising story?
I think we have had a great 2010. I mean, we have come out of the trough. 2007 was a great year. Since then, we have seen volumes have been coming down. 2010, I think capital markets volumes are up almost 50% for equity. We did almost $27 billion this year. As far as M&A is concerned, we did $54 billion worth of M&A from India, which is the highest ever, beating out all records. Debt, again, basically markets have picked up, both on the dollar side as well as the rupee side.
Right. Are you as optimistic, Frank?
I think it depends. I mean, clearly the India story of domestically generated economic growth is extremely powerful, and I see no threats domestically at all. I think where perhaps India is a little bit vulnerable is the proportion of FII investment on the stock market.
But otherwise you'd be more or less positive.
Otherwise I'd share Saurabh's view that it's been a very good year, and you know, from a domestic perspective, I don't see any clouds on the horizon.
Okay, so what was the most exciting deal that you thought was, you know, as a sort of, as somebody who looks at every deal and tries to analyze it from a vantage point, what excited you the most that appeared to be the most challenging piece of 2010?
I think each sector has its own nuances. If we look at probably Bharti Zain was a great example of a deal, a telecom company going out, acquiring market share in a large market like Africa, a large continent like Africa. So that was a great transaction. I thought Reliance did some great transactions too, where they went out and acquired shale gas assets, which was pretty unique. We haven't seen Reliance doing it, focused primarily on the domestic market.
So they were sort of attempting to